Welcome to the Real Estate Show with your real estate and mortgaging team, Terry Kilakos and Merav Marciano on CJAD 800.
And a happy Sunday afternoon, everyone. You're listening to The Real Estate Show. I'm your host, Terry Kilakos. And today we're going to be talking about the pros and cons of refinancing your property. Joining me, we have my co-host, Merav Marciano, chartered real estate and mortgage broker and vice president of Northeast. Welcome.
Hey.
What's going on?
What's going on with you?
I was going to ask you how your drive-in was, but we drove in together, so it's...
The driver was terrible.
It wasn't me driving, so... It was me driving. We took a couple of months off, right? But now we're back and we are in full swing. I mean, it's been absolutely crazy this year. Last week we were on our first show. I just have to say one thing. After last week's show, we actually, for those of you that were listening, we had a caller talking about their dog, and actually their daughter's dog, who they're moving into a condo, whatnot. During that whole thing, I had a whole bunch of texters.
Yes.
I had people on Facebook.
Well, to recap, the dog was overweight.
Well, we don't know if it was the dog was overweight.
Based on the condo rules.
Yeah, we don't know if it was overweight based on the condo rules, but, we're not sure if the dog was just overweight or if the dog was, a big dog. But anyways, I had a bunch of people tell me, you didn't read what I said. And so I'm just going to just say there was a bunch of people, including some people when I went to a party last Sunday night, which were telling me the dog should go on a diet.
And then he'll be approved by the condo association.
You can join the conversation by calling in with your questions at 514-790-0800 or texting in to 514-800. You can also watch us and comment on Facebook Live at facebook.com/Northeast Mortgages. And if you haven't done so already, take a moment to subscribe to our YouTube channel, which is newsonthego.ca. So today we're going to, like we mentioned earlier, we're going to be talking about refinancing, kind of the pros and the cons of it. It's a question that comes up all the time, and it's literally daily. I mean, I know that you get that question pretty often. We get people that come in, do we sell? Do we refinance? We have debts. We got to do renovations, all these things. So we're going to be looking into that. But before we kick off the show, let's do a little bit of a market update. And it has been an absolutely crazy week. If we take a look at what's going on in the stock market, I mean, the stock market just took a complete nosedive this week.
Complete.
And, a lot of people are kind of saying real estate is the safe way to go. It's the only way to go. At least it constantly goes up. Well, I don't want to say that. I don't want to say that real estate is one of these investments that's constantly going up. We've seen corrections. We've seen crashes happen in the States. It could happen anywhere. We've seen them happen in Europe. But at the same time, people are trying to kind of flee the markets right now. Last I checked, there was over $3.4 trillion that disappeared out of markets this week.
What caused that? Coronavirus fears? What is it?
Exactly. So basically what ended up happening is the coronavirus, everything that, was kind of in the media and whatnot, it kind of led investors to kind of pull out of the market. They started leaning more towards going towards kind of the safety of bonds and cash and, kind of positioning themselves for a market correction. Now, this is an important thing to remember, guys, because for those of you who know me, you know that I'm not the type of person that's always, the sky is falling. When there's something to panic about, I will be the first one to say that there's something to panic. But, what we saw this week was a market correction. And I just want to explain to the public a little bit, what's the difference between a market crash, market correction, and a bear market, right? So when we're looking at a 10% decrease in the stock market, what we're actually looking at is we're looking at a market correction. The minute it goes to 20%, now all of a sudden we're getting into crashes and we're going into bear markets. So it's important to not overly panic. I think that for us as Canadians, especially considering, tomorrow is our deadline for RSP contributions, I think this is fantastic because basically we're buying stocks and we're buying RSPs at a discounted rate because of what has happened. Now, the other interesting thing is in the next little while, we're going to have the Bank of Canada that's going to be meeting. And, I should have actually queued up some prediction music or something. Yeah, something like that. What's my prediction? So March 4th is when the Bank of Canada is meeting. They're going to be announcing whether or not they're going to be raising keeping the interest rates the same or lowering them.
What do you think, Terry? Up, down, steady?
You know, economists are basically saying that they're going to be dropping the rates. Some of the indicators that I look at are telling me that they're going to keep the rates the same. But the U.S., based on what's happened this week, a lot of the economists in Wall Street is pushing the Fed to basically drop interest rates to prevent the actual market from dropping any more than where it is right now. So whether or not that's going to happen, it remains to be seen. What are my indicators? So this is an important thing, and this is something that everyone can do. So if the Bank of Canada was to actually drop rates, what it would end up doing is it would actually raise inflation. That's the first thing that it does. The other thing that it does is it raises the Canadian dollar versus the US dollar. And although it's great for us, I've said this before, you know, as consumers to be able to go down to the States on vacation and have the US and the Canadian dollar kind of at parity, it's actually horrendous for the economy, because when we're talking about selling US or Canadian goods, foreigners might look at it and say, well, the US dollar is stronger, so we're going to buy Canadian goods. If the Canadian dollar is stronger, they're going to buy US goods. So it ends up, it's a balancing act, right? Mm-hmm. So the indicators right now for me are saying that there's not going to be a change. But based on everything that I'm hearing with what's happening in the stock market, as well as what's going on with the Canadian US dollar right now, there's a good spread between it. We might actually be seeing a slight rate drop.
And that would affect, of course, the variable rates, not the fixed rates.
Yeah. So when you end up having a drop occur in the overnight rate, what that does is it actually causes the prime rates of the banks to go down. And once the prime rate of the bank goes down, then you end up seeing a drop occur within the variable rates.
Yes.
So it remains to be seen. My prediction is I'm at the risk of sounding like I'm kind of on the fence and I'm sitting neutral on this. What's happening with the coronavirus is telling me that rates are going to drop, but my indicators are telling me that rates are going to stay stable. So this is going to have a lot to do with kind of like, you know, how the government wants to kind of make people, you know, if they want to make people kind of feel better, they're going to actually probably drop the rates.
What would be better for the economy, a rate drop or keeping it steady?
I don't think that they should have actually raised rates when they did. So I think a rate drop would be good. I don't think it would be a bad thing. Right now, when you're looking at the variable interest rates, historically, they're actually lower than the fixed rates. Mm. But what we're actually seeing right now is the 5-year fixed rates are much lower than the variable rates.
Yes.
So a lot of people are, they're opting to go fixed as opposed to going variable. Mind you, if there is a correction this week and the rates drop by 25 basis points, which is usually what they do, then at that point, we're going to end up seeing the variable rates probably dropping to the same level as what the 5-year fixed rates are.
Wow. And with respect to the stock market, do you think it's gonna recover next week?
No, I think that all the economists in the States, Wall Street is basically thinking that it's going to actually continue to slide. How much it's going to slide, it remains to be seen. I'm not a financial advisor. I'm not a stockbroker. But one of the things that I will say, and I could tell you what I'm doing personally, is my positions are in cash right now, right? So when I'm looking at my investments, I kind of park them away in cash, and then within the market. Mm-hmm. But then eventually what I end up doing is I end up switching it over and buying the stocks at a discount compared to where they were. Coming up, we're going to be looking at how mortgage penalties are calculated and things to look out for in your mortgage contract when you're actually doing a refinancing.
You're listening to The Real Estate Show with your real estate and mortgaging team, Terry Kilakos and Merav Marciano on CJAD 800.
You're listening to The Real Estate Show, and today we're talking about the pros and cons of refinancing your property. Feel free to call in with your questions at 514-790-0800 or text in to 514-800 in order to join the conversation, just like Tommy did, who had a question about whether or not you're able to buy a property with no money down. So the short answer is no, and the long answer is yes. Okay.
There is a way.
There is a way to buy a property with no money down. There's, you can get cashbacks from the banks, especially if you're buying an owner-occupied property. You can also borrow the money from lines of credit and credit cards to be able to qualify to buy that property.
Or get gifts from family members.
Exactly, or get gifts from family members. However, it is actually really important to remember that whenever you're borrowing funds to actually buy a property, whatever your payments are on that loan or on that line of credit or on the credit card or whatever you've just gotten, you have to be able to qualify. So for those of you who have heard my show before, I've talked about the financing triangle, right? In the financing triangle, there's different things that are looked at. So your income, your equity, all those things kind of work together to, to determine whether or not you qualify for a property. So as long as your indebtment ratios on your income work with that debt in there, you'll be able to buy the property with no money down. But the reason why I said the short answer is no is because you always need to have that 5% at least. How you get that 5%
is another story.
We have another text here from Zach who is asking, is it accurate to say that when you have a mortgage, you don't actually own your home? The bank does. Zach, and it's great that this text came in because we actually had someone, I saw a comment on Facebook the other day from, oddly enough, one of my clients, which I was a little taken back, but anyways, but I hear it all the time. People say, when you have a mortgage, it's not you that actually owns the property, the bank owns the property. Well, I'm here to tell you that is not the case. So a lot of times people think, oh, I have a mortgage, so the house doesn't belong to me, it belongs to the bank. Well, let's understand what it means to own something, right? So when you own something, in Quebec especially, you have 3 modalities of ownership. Okay, so now I'm going to get super technical and I'm going to start talking legalese. And Merav is shaking her head and she's like, okay, here he goes. Okay, but hear me out, okay? So there's 3 things that are looked at. Number 1, the 3 modalities of ownership. Number 1, usus. Number 2, fructus, and number 3, abuses, okay? Which basically means that you have the right to use a property or use an item. So forget about property. Let's talk about a pen, a calculator, a piece of paper. When you own something, you have the right to use it. You have the right to bear fruit from it. So I can take my pen, I can lend it out to you, and you can pay me a rent for it. Therefore, I generate fruits off of that pen, and thus I'm able to fructus. And abuses, I can destroy it, I could sell it, I can alienate, I could do all kinds of stuff with it. So those are the 3 modalities of ownership. Now, when you own a property, well, you have all those 3 modalities, even if you have a mortgage on it. So, which means that you actually do own the property.
But you also own the liability.
You own the liability as well. Exactly. So obviously, if you don't pay your mortgage, then somebody's going to come knocking at your door and they're going to want to take the property from you.
Just because you put your property as a guarantee towards that liability, but it doesn't mean you don't own that property.
Exactly. The funny thing is that I hear people talking about this all the time when it comes to real estate, but I never hear people talk about it when it comes to cars. So people will have a car payment, they'll finance a car and they're going to be like, oh no, that's my car, I own it. Well, you have a loan on it. Yeah, it doesn't matter. It's just a loan. It's just financed. Well, it's the same thing. Okay. So you kind of got to understand that.
So you're saying separate the asset from the liability. Don't sort of say because you have a liability associated to that asset, then that means that asset doesn't belong to you.
Exactly. That asset does belong to you. Okay. So it's very, 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 very important to remember. So today we're going to be looking at the age-old question as to whether breaking your mortgage and refinancing makes sense. You actually recently came up with a statistic you saw.
Yeah. Basically, some lender statistics came out saying that 60% of borrowers refinance by the 3-year mark or restructure or break their mortgage. Any kind of basically they break their term. And there's another 10 to 15 who actually break their term by the 4-year mark. Yeah. So we were aware of this statistic at Northeast. We know that things happen in life. So I found that statistic very interesting and very on point when we look at our client list.
Yeah.
We do see that 75% of them do come back before the end of the 5-year term.
Absolutely. And it's one of the reasons why when we actually structure mortgages for people, a lot of times people, they're going to come in, they're going to say, I want to be with a brick and mortar bank. Well, the way that a brick and mortar bank is going to calculate a penalty is actually much different than the way that, for example, a virtual lender will, calculate a penalty. So it's important that when you're actually structuring your mortgage, you want to structure it in a way that it makes sense.
So what you're saying is that one of the most important things to know when signing for a mortgage is the penalty more than the rate, right? Because basically you have to know how the penalty is calculated.
Absolutely.
Okay.
And it's something that, if you speak to a banker, they're going to say, well, all banks calculate penalties the same way. And on the surface, that is correct. They're not lying. All banks will charge you one of two different types of penalties, one being an interest rate differential penalty and the other one being 3 months of interest. Now, the way that, 3 months of interest is very simple. You look, whatever your interest rate is, multiply it by your balance, and then divide it by 12 and then multiply by 3 and boom, you end up I know I sped through it. It's 3 months of interest. Okay, it's not 3 months. It's not 3 months of payments. It's 3 months of interest. Okay, so
you just added and subtracted and removed and multiplied and divided.
Call me at the office. I'll give you the calculation. But the interest rate differential penalty is much different, and the interest rate differential penalty takes into account what kind of a discount did the bank give you when you got the mortgage. What kind of interest rate are they able to secure for that type of loan right now? What kind of interest rate did you have? So all those things factor in to determine what your penalty is. And those penalties are the ones that we see that go into the tens of thousands of dollars.
Yes.
Now, the fundamental difference between going to a mortgage broker and going directly into the branch to sign a mortgage is that when you're going to a mortgage broker, there is no posted rates for the most part. Posted rates do not exist. You're not getting a discount. No one's doing you a favor. You're not going to walk into a mortgage broker and the mortgage broker is going to say to you, the posted rate is 519 and I'm able to get you 259 and therefore, that difference, if you break the mortgage, we want it back. We're giving you the broker rate, not just us, and I always tell people, don't come to us, go to a mortgage broker, any mortgage broker. Any mortgage broker will be able to kind of do the same thing. We just tend to do things a little bit better. Up next, we're going to be looking at the different cases where it makes sense to refinance, and we're going to actually get to a few more texts that came in. You're listening to The Real Estate Show on CJAD 800.
You're listening to The Real Estate Show with your real estate and mortgaging team, Terry Kilakos and Merav Marciano on CJAD 800.
You're listening to The Real Estate Show, and today we're talking about the pros and cons of refinancing your property. Feel free to join the conversation by calling in at 514-790-0800 or text in to 514-800, just like Rosie did from St. Lazare. Hey, Rosie, how are you?
Very good, Terry. How are you?
I'm excellent.
So here's my question. I recently paid off my mortgage to the bank, and so I got the discharge papers and all that. But my question is, I haven't gone to the notary to have it officially done because it's quite expensive.
Yeah, to radiate it.
And I'm not planning on selling the house. I'm going to live in it for a very long time. So my questions are, what are the ramifications of not going through with the notary and doing it all the way?
Honestly, nothing. What's going to end up happening is the next time you're going to have a notarial transaction that you're going to be doing on your property, whether it's to sell it, refinance it, do anything like that, then what's going to happen is the notary at that point in time will will close that mortgage. It's called a radiation. They'll radiate it. You can do it now. I mean, you could find notaries that are not going to kind of charge you an arm and a leg for it. I don't want to quote a price because every time I quote a price for notaries, I always end up getting a backlash from them. But we have a couple of notaries that we work with, which are not, kind of terribly expensive. You could do it, but you don't necessarily have to. As long as you have, obviously, a statement from the bank that shows that it's paid off and everything, you're good to go. Don't worry about it.
Okay. I would be curious. I did ask my notary how much it would cost, and it was because I also have a HELOC with it, so I have to pay twice.
Yeah.
And it's at least I think it was $675, which I thought is a heck of a lot of money.
Yeah, it is. You could probably get it a little bit less, but I mean, it's not going to be much less than that.
Okay.
And I would, if it doesn't bother you, you could leave it. But again, I mean, if it's one of these things that you just want to get rid of, you want to have it radiated, have it free and clear, 100% for yourself, go for it.
Okay, and legally, no ramifications. The house is mine.
Nope.
It's not. Yeah.
Yeah.
Okay.
No. The house was yours to begin with.
Yeah, right. I just heard that. All right. Well, thank you very much.
No problem, Rosie.
Bye-bye.
Have yourself a great day. We have a text that came in as well. I'm looking to refinance. I can't speak today. Usually, I
It's because I'm in front of you.
I
You're
know.
a
I have
little
this beautiful woman in
distracted.
front of me. I could say it because she's my wife. No hashtag me too's, anyone, please. Okay, so I'm looking to refinance my property for renovation purposes. My house is currently paid off. I have no mortgage. Rates being what they are, would it be more prudent to refinance now or wait until the summer? Originally, I was going to wait because we won't be starting the renovations until August, but now I'm not sure. Well, I have a really, really, really easy answer for you. So with us, with Northeast, and I'll say with most people, okay, but especially with us, just because we're awesome, and I like to pat myself on the back sometimes, we can secure your interest rates for 90 to 120 days, depending on the lender that we go with, right? So some lenders will cap us out at 90, some lenders will be 120, which means that if you're concerned that interest rates are going to go up, which between all of us, I was about to say between you and me, but I just realized it's not between you and me, it's between me,
All the
you, and
listeners.
all the listeners. But anyways, between us, rates are not going to go up. So I don't think you really have much to worry about as far as that goes. But if you really want, what we can do is we can go in, we can lock in an interest rate for you. So we can set up the refi from now, get it approved, get it finalized, but not actually go to notary, which means that you don't actually start paying for that money until you actually take that money out in the summer. Mm-hmm. So we can do it at this point in time. Even 90 days will take us into the summer. So that I think can probably help you quite a bit. And the other thing that we do is we do what's called float downs. So for example, let's say you come in, we structure an interest rate for you, and next month the rates drop, we float down that interest rate. So constantly up until the time that you're going to go to notary, we'll constantly be kind of monitoring the market, making sure that you end up getting the lowest possible rate right up until literally the last minute.
Now, Terry, I wanted to ask you, speaking of refinance, you had coined the term strategic refinance. Can you explain how doing this can actually change people's lives?
So what I mean by when I talk about strategic refinancing, it's not just kind of taking money out and obviously
Going to Las Vegas or,
going gambling or vacationing.
Yes.
A strategic refinance is when you're actually taking the money out for a purpose. So a lot of times people, what they do is they focus all their energies on paying off their mortgage, not building up actually assets. When you do that, unfortunately, you end up having a house that's paid off, but then when you need money for renovations, actually lines up pretty nicely with this texter, you have to go back and refinance that mortgage.
Yes.
Right? Or you need to go and get a line of credit, or you need to do something like that to be able to pay for those renovations. Instead of doing that, instead of focusing your energy on the liabilities, in other words, that mortgage, what you do is you focus on the assets. Focus on building up your RSPs, focus on building up your TFSAs, focus on building up actual tangible assets, right? Cash. Once you've done that, then you can actually take that money, and that money is going to actually bear fruits because that asset will generate, whether it's dividends, whether it's tax refunds, if it's an RSP, those tax refunds, those dividends that those investments are generating for you, use them to pay off your mortgage. Right?
Yes.
So you're not using your dollars that you're working for to pay off the mortgage. You're using investment fruits to actually pay down the actual mortgage or the liabilities. And then by doing that, when your mortgage is eventually paid off, you have a ton of assets that you've built up. And now whenever, push comes to shove and you need some money, you can actually lean on your investments, or you can lean on your savings.
Yes.
So that's kind of what I'm talking about when I'm talking strategic refinancing.
And the law of attraction, right?
Absolutely, yeah.
You focus on debts, you get more debts. You focus on growth, you get more growth.
100%. And it's so important that, you have debts, put a plan in place to pay off your debts and focus on the prosperity. And I guarantee your life is going to be really different. We do have a quick text here also. Hi there. I have $300,000 liquid cash. I want to buy a house of $1 million, but my credit is that of 600. It could be done. It could be done.
We've seen also, you actually sit there and have a look at the credit and see where the issue is. And sometimes it's something we don't even realize.
Exactly.
Like being over limit on certain cards or something old that's still showing there.
Yeah.
Doing a small correction on your Equifax or doing a couple of payments on certain debts.
Yeah.
You've actually had people boost their credit like
that. Yeah, absolutely. Well, first, without even boosting the credit, we have lenders that would gladly lend in a case like that. Okay, yes. The loan to value is very good. So the loan to value being how much you're putting down versus how much you're borrowing, you're good to go. Why is the credit score at 600? Whenever I see a credit score at 600, typically there might be late payments on it, but most likely you're either hugging your limits or you're over limit. Maybe you had a consumer proposal, maybe you had a bankruptcy. All these things, we work together with the actual borrower to fix them. Yeah. We have another text. What is the difference between going to you and going to the bank for a home equity loan? We're awesome. That's the difference.
That's not a good answer.
What's the difference? Well, ultimately, when you come to a mortgage broker, your mortgage ends up with either a bank or a virtual lender. You can go to us, you can go to the bank. The difference is the experience and basically the know-how. You have to remember, when you're going to the bank is selling you one product that they have. They're not looking at the market. So, for example, this gentleman or lady who texted earlier with a 600 credit score, well, in her case or his case, what would end up happening if they walk into a bank, most banks would actually refuse them. But if they come to a mortgage broker, we have 20 banks to look at.
We have options.
We have options, different interest rate, different products for different people. Stay tuned for more talk about refinancing, including a couple of other texts that came in. You're listening to The Real Estate Show on CJAD 800.
You're listening to The Real Estate Show with your real estate and mortgaging team, Terry Kilakos and Merav Marciano on CJAD 800.
And we're quickly running out of real estate here. Thanks for tuning in. You're listening to The Real Estate Show. Let's get back into this interesting discussion about refinancing. And let's look at some of the reasons why people would actually refinance a property. You had a nice list that we kind of go through at the office.
Yes.
Let's start it. Let's do like a back and forth here. Okay. Come on, let's...
Well, some of the most common ones are better rate.
Yeah.
So, for example, nowadays I find we're hovering at similar rates, but we do see people say, I want to refinance or restructure my mortgage for a better rate.
Absolutely.
Do you find that's a good idea?
Yes and no. If you're exchanging 4 quarters for $1, then no, obviously. Yeah. But if you're, if it's going to make a major impact in your life, so if it's going to actually be used to, pay off debts and increase your cash flow, well, yeah, absolutely. And that's all part of the kind of the strategic refinancing. We saw a texter as well who wanted to refinance so that they can pay for renovations, right? You can also refinance to kind of buy an investment property or investments or buy a vacation property.
That, I have to say, I like that one. That's how we built up our net worth.
Absolutely.
By refinancing our properties, buying more properties, buying vacation homes, buying everything that we need, growing our business. So basically, if you use that refinance money to grow your net worth, I say green light. Definitely
100%. 100%. You can also help your children buy a property, right? So I've seen that people come in, they refinance, they help their people, their children.
They're little humans.
They're little humans that live with it. Buy a property,
yes.
Obviously better rate like we had talked about. Also, when we're talking about an investment, this is something interesting, which we didn't really get into. You have to remember, so let's say you have a property that's fully paid off and you decide to take out $100,000 to dump it into investments. Well, that becomes a leverage, right? So you're leveraging to be able to buy this. Now that mortgage becomes tax deductible, even if it's on a principal residence. Right,
yes.
Provided
because normally an interest is not tax deductible if it's a principal residence, right?
Exactly.
But an investment is.
Exactly.
Okay.
Also to you want to kind of look at if you have multiple mortgages, which I see all the time. People go to the banks and the banks love they drive me crazy. They love staggering mortgages, you know, so you have one that expires this day, one that expires a year from now, one that expires in 10 years from now. I don't know. Like, I've seen it all.
Yes.
And then there's lines of credits on top and credit cards and this, and people lose their minds because they're constantly sitting within a banker's office. So, you know, to consolidate 2 mortgages into 1 or 3, that's also something that comes up very often. The bottom line, and this is something that people really need to understand, is that when you do any type of refinance, it has to make sense. If it doesn't make sense, do not do it. If you're exchanging 4 quarters for $1, do not do it. If you're going to be strategically refinancing, then do it. During the break, we were kind of talking a little bit about, you know, whether it's a good idea to refinance a car into a mortgage.
Yes.
I hate that. Okay, I really do, because...
But in some cases, it might make sense if you just save them $800 a month.
Yes.
If there's like 8 months left on their car payments.
Well, okay. Well, I don't know about 8 months, but honestly, think about it, right? I mean, if you're refinancing a car into your mortgage, you have to make sure that you're going to do something really good with those car payments that you're saving every month. Because if you're not, what's going to end up happening is you're going to save that money, yes, okay, to refinance into your mortgage, you know, a $30,000 vehicle, you put it into the mortgage.
No more payments.
No more payments on it. Your payments on the mortgage are going to be ridiculously low. But what's going to end up happening is now, you know, 3, 4, 5 years from now, that car is going to be dead. It's you're not going to have it anymore. Meanwhile, you're still paying for it 25 years from now.
So you're saying that $800 savings, put it into something else. Let's say put it into an investment.
Put it into your RSP.
I get it.
Right?
Get it.
You know, our RSPs are kind of the flavor right now because the deadline is tomorrow. Put it into your RSP.
Yes.
If you do that, now all of a sudden you're getting a tax benefit at the end of the year. You get that tax benefit. Now it made sense. What
so
you
don't
just
save the money, reassign where that money goes.
Exactly.
And now you've, again, back to the net worth. You're actually building up your net worth.
Exactly.
And what about those banks who say they'll absorb the penalty? Is that actually true? That's not.
So I don't know which bank, which banker kind of lines up to do people favors. Bankers don't do that. I've always said, you know, when a board of directors in a bank kind of gets together and, you know, they come up with new products and new solutions for customers, the solutions are rarely in the favor of the consumer. They might appear to be in the favor of the consumer, but more likely it's how they can actually put more money in their pockets. So a lot of time what ends up happening is when a bank tells you we're going to absorb the penalty, what they're actually doing is they're doing what's called a blend and extend. So they're blending your old interest rate with the new interest rate, extending the term, thus hiding within the new rate the actual penalty that you were going to pay.
So they've collected the penalty from you no matter what. They just incorporate it into a new rate.
Exactly.
That's been blended, basically.
Exactly. And a lot of times when you're doing those blend and extends, they're not changing amortizations. They're not doing stuff like that would actually really benefit you. So you have to do your homework and don't even, I've always told people, don't even take what I'm telling you at face value. Do your own homework. It's, you know, the thing that I love about mortgages is that it's very black and white. You literally can sit down and you can do the calculations yourself and you could figure out exactly if it makes sense or not. Unfortunately, the majority of people don't want to do that calculation because they don't want to see the reality. When you come to see me, I show you the reality. And
you decide, or you plan with the client if it makes sense to actually break that mortgage, take on that penalty and save that, whether it's that cash flow, whether it's whatever the strategy is.
That's right.
Yes.
We have a text that just came in. I'm supposed to remortgage this summer, but I am still on a consumer proposal till September. Does this present a great problem? Yeah, it does. It does. It presents a huge problem. However, if you end up going to within your kind of the bank that you deal with, chances are they're going to refuse you, or they're going to tell you need a cosigner, or there's going to be, chances are it's going to be refused. Within the brokerage channel, we actually have solutions in cases like that. We have lenders that would lend on the short term, 6 months, 1 year, where we can get rid of that consumer proposal, right?
And is there cases where they'll just renew and not check up on your credit?
Renewing is not a problem,
Okay.
but they're specifically saying remortgaging. So if you're just renewing your mortgage, no problem. You're not going to have, you shouldn't have an issue unless...
Yeah, in some cases, we've seen credit checks at renewal now.
The credit check is not necessarily the issue. The problem is that if you've fallen behind on payments on your mortgage, you have to remember, although the lender has to honor your term, it doesn't mean that they have to renew you, right? And 98% of the time, the banks will renew you. But if they're looking for an excuse to get rid of you for whatever reason, then they can use stuff like that to their kind of advantage to do it. Make sense?
Yeah, absolutely.
Merav, we're very, very quickly running out of real estate here.
Well,
so
I just wanted to make sure everybody knows that life happens.
Yeah.
There's divorces, there's sales, there's job transfers. There's you want to upgrade, downgrade. You have children, you suddenly have triplets. Things happen, so you do have to know about penalties.
Who has triplets?
I know somebody who had triplets.
I had a client 2 weeks ago that had triplets. Yeah,
things
absolutely.
happen, and you have to be ready, and you have to know the consequences of breaking a mortgage.
Absolutely. If you guys want to get a hold of us, you can reach us at the office at 514-680-4674. As well, you can visit us online at northeastmortgages.ca. And if you haven't done so already, take a moment to subscribe to our YouTube channel, which is newsonthego.ca, where all these wonderful shows actually live. And till next week, everyone, have a blessed week. I love you all.